Morning, everyone. This is Neil with the Daily Dividend Investor. It's Tuesday, February 14th, 2017. Happy Valentine's Day. Today I'm just doing a quick overview on the DDI portfolio. I wanted to show you a few things that I thought were interesting. As you can see today, even though the market is up, let me go over here to Morningstar and see. Yeah, market is, Dow is up 47, S&P 3, a little over 3, almost 4 points. The DDI portfolio is down a little bit today. Some of the income stocks taking a little bit of a hit. But, that's okay because what you're not seeing here is that over the last 2 days we had about $1,000 gain and $2,000 gain. I think Friday was 2,000, Monday was 1,000. So this is really just kind of leveling out of the last couple of days. And if you're going to be investing in stocks for the long term, investing for income, you're going to have to kind of put the blinders on to daily swings. You're in this for the long term. If you're in it for short term, you're probably not investing for income. So anyhow, there's that. And I just wanted to show you a couple things that I thought were really interesting. This is the new Wells Fargo page. They've updated it recently. And you can kind of see a breakdown of the holdings of the DDI. I've got a little over 500,000 in stocks, a little bit in ETF, a little bit in mutual funds, and a little bit in cash. And then the allocation. But what I want to really show you though is the performance. That was one of the things that the new Wells Fargo page kind of makes it easier to see your performance. So let me go to performance here. I want to show you something. I was kind of excited by this actually. Over last year, since 2016, the portfolio returned 22, almost 23%. And honestly, I have to admit, I was sort of patting myself on the back, like, "Woo, good job! Like, I'm a really smart guy." And then I said, "Well, wait a minute. We should really compare this return to some, index like the S&P." So let's go ahead, and even though the DDI doesn't really track the S&P, let's go over here and look at the S&P and see how it did over the last year. So we're going to look at performance, and the S&P last year, 1 year return, 24.85. So the DDI portfolio didn't quite do as well over the last 1 year as the S&P. And you can also see year to date, S&P is up almost 4%, and the DDI is year to date at just under 2%. But if you do comparisons over sort of the longer term, you'll see that it does kind of ebb and flow a little bit. Like the DDI just over 10% over 3 years, almost 12% over 5, and the S&P was 8 and 11.5. So on a longer term, actually, it has outperformed the S&P. Not that that's necessarily the goal, but I guess you do want to make sure that you're not doing significantly worse than if you had just thrown your money into an index fund or tracked an index such as the S&P. So I guess my point is that Mr. Market helped quite a bit with some of these returns. It wasn't like I'm some genius that knows exactly what stocks to pick. And I hope that as you read along or you follow along, you realize that I am not some magical stock picker. And, you can get similar results yourself. It's all kind of up to you. Here's another thing that I thought was really interesting. So if you look at the DDI portfolio, and Wells Fargo only tracks it back to 2010. I actually started the DDI in 2008, although I've only been writing about it since about 2010. But if you take this as the starting point, $123,000, and you can see that I've added a net cash of $240,000. That adds up to roughly 360, almost 365,000. But yet the total market value is closer to 565, 561. So almost $200,000 in investment returns over that time frame. So that's just investing and letting the money sit there and just letting the market work for you. So And don't get discouraged either. You know, let's trim these numbers down. What if you would put in, instead of 123, you put in $1,231, and then you added, say, $2,400 over that next, what, 5 years? You would have put in $3,500, and you'd be sitting on $5,600. That's still not bad. I mean, that's, you know, if you look here, 10.62% return. That's still way better than any CD, any money market account. You know, like Ally Bank is paying 1% right now on their money market account. Now, granted, you do have the risk of stocks, and you've seen that right here with this daily fluctuation, you know. But in the long term, you're going to be rewarded for taking that risk, and that's just kind of what I wanted to point out. The other interesting thing that I wanted to point out too was I took money out of the DDI portfolio last year. You can see I actually took out more money than I put in, $28,750. But yet the portfolio still returned almost 5 times that amount. I mean, last year was phenomenal. You can't really expect to get 22% every year, and you can see that here. 3%, almost 10%, 18%, 11%, and then a loss in 2015, albeit a very small loss, and then just a fantastic year last year to make up for it. So my point again is that you know, even taking money out, the portfolio still churned and churned and churned and made over 6 figures last year. So I'm very happy with that. So anyhow, that's a quick recap on where the portfolio sits today. And let me know if you have questions or what you're investing in. I'm always interested in hearing what fellow income investors are thinking about. All right. Have a good day. Talk to you later.